Welcome back. You're still watching Business Morning. Oil prices steady today after a two-day slump, reflecting the world's mixed economic recovery from the pandemic, with U.S. demand expected to keep rising, while a second coronavirus wave raging in India has led to more curbs on movement. Brent crude was up 18 cents at $66.84 a barrel, having fallen 3% yesterday. U.S. oil gained 37 cents to $63.73 a barrel. After a 3.3% drop in the previous session, gasoline stocks were down by 2 million barrels compared with predictions of an 886,000 barrel fall. Gasoline products supplied a measure of demand that rose by 5% to 9.2 million barrels per day, though this was partly follow-on demand from the Colonial Pipeline shutdown. And now for more happenings in the commodity space, we have Nosike Nwajide, analyst with Financial Derivatives Company. Thank you for joining us on the program.
Always my pleasure.
Well, oil prices have steadied after a two-day slump. Economies are opening, but there's still concerns on COVID-19 cases in Asia, combined with the hike in inflation. Are we on a steady rise here, or is it just a blip?
In my opinion, it should be a steady rise. At the moment, we're battling with contrasting data, conflicting events in the West and the East. In the West, it's a resumption to almost normal, what you call normal activity. The economies are reopened in the US and the EU, while in the East, there's India, there's Taiwan, there's Thailand, and there's also another country where there are some resurgence in COVID-19 cases, and some cities are instituting lockdown. So you have that sentiment and that negative sentiment on oil and the positive on this side. But I feel as long as there are vaccines, and even it's India, they're one of the biggest producers of vaccines, but somehow that seems to not be affecting the number of COVID-19 cases. But I think over time, the next couple of months, that should be sorted out. And we'll see a pickup in economic activity. The lockdowns will be gone for good, hopefully, and we'll see oil prices steadily rise because it's summer. It's the summer driving season in the US. The aviation industry globally is coming back online, so there's increased demand for oil. So
and we still have the Iran supply issue.
Oh yes, Iran could potentially be bringing back about 2 million barrels of oil back to the international market. Some analysts think that already most of that output is already sold in the black market. So the market already kind of knows this, but it's something that remains to be seen. I mean, the Iran nuclear...
But it should have an effect.
It should have an effect ordinarily. But some analysts already say, look, there's 2 million barrels of oil that could be launched back into the market, but we know that somehow the Iranians sell this oil. It's a black market activity. But the market is bracing itself. I mean, the talks on the nuclear deal have made substantial progress, apparently. And in a couple of months, we could see Iran put that much output back to the market. We could see there's also the Strait of Hormuz, where Iran is going to bypass that strait. It's where the oil from the Middle East, basically, a lot of the oil from the Middle East gets into the ocean to the rest of the world. Iran is looking to bypass that because that's an area of great conflict. It typically, when there's geopolitical tension around that area, affects oil prices.
And there is tension in the Middle East.
Yes, Iran is looking to bypass that. So in the coming months, it'll be interesting to see how it plays out. But we feel that Iran is an OPEC member. It's been under sanctions for quite some time. It will be interesting to see how, if OPEC Plus is able to tell it to, you need to hold out on some of your outputs. I doubt if they will, but Iran and Saudi Arabia have over time been head-to-head
bigger than the powers.
Issues.
Okay, back here in Nigeria, the Governors Forum, they're asking for deregulation. I mean, we talk about subsidy. We've been talking about this like forever. And there's a PIB bill that's supposed to be passed, and these are supposed to shape the local front when you're talking about oil prices and revenue and all that. How do you see this going?
It comes down to revenue. It comes down to government revenue. I mean, the FAC allocations over time, or right now, the amount the NNPC is subsidizing Nigeria's domestic fuel consumption with is substantial enough to have an impact on the monthly FAC allocations. When the NNPC, for instance, tells you that in the month of May, it's likely not going to remit any any like 0 naira to the fact, that's a problem. And if you were to take out subsidies and sell fuel at the international price, if you just look at the neighboring countries from Cameroon to Niger Republic, Chad, PMS is sold at over 300 naira. And the governors, from their own studying the report that they released, I mean, it could sell for as high as 385 naira or thereabouts. I mean, that would be, the impact would be inflationary. It would be, I mean, we know Labour would fight it. Labour, obviously, it's something that, because I know that the government and Labour are in talks at the moment on how they could go about ending the subsidy. Would you increase the minimum wage? Where's the money going to come from? Nigeria has revenue issues that it needs to sort out. With regards to the petroleum industry bill, there's so much in potential investment that has been delayed, locked away, just because investors are not clear on the fiscal incentives that are supposed to incentivize their investment. So as long as this, early in the year, we heard that by the first quarter it would have been sorted out. This is May. We heard that by June, at least the end of June. So we wait and see, and it's critical to the deregulation.
We have a lot of wait and see.
We have so many.
We have to wait and see. We have no choice at the moment.
Well, another big one. Royal Dutch Shell PLC, they've acknowledged that the operations in Nigeria aren't compatible with plans to go green. What impact would this have on the Nigerian economy going forward?
To begin with, I think it's a cold dose of reality. The world is transitioning away from oil and rapidly away to renewable, cleaner forms of energy. Shell has clearly stated that by 2050, it wants to be known as a clean energy company. Its focus now is climate change and zero carbon emissions strategy. So does that align with its Nigerian operations? No, it doesn't. I mean, the onshore operations, for the past 10 years, they've been gradually divesting their onshore operations to focus on offshore and gas. They are one of the investors in the NLNG project, and Nigeria is more of a gas economy than oil economy. So it still has, some operations, but it's onshore activity. There's, the insecurity in the Niger Delta, the community oil spills, sabotage, theft, and clashes with community. Those things, there have been protracted legal cases, and especially this major oil spill in parts of Rivers State. I mean, Shell is the one, everybody holds Shell responsible. Yeah. No one seems to be holding the government's answer, but everyone seems to point to Shell. So they will obviously sell off their investments. It depends, it's unclear as to who is going to acquire these assets. Are they Nigerian players? Are they foreign?
Are they going to continue in the trend? And then we'll still have the same issue of communities complaining about pollution and things like that.
Yeah, well, if you sell to a Nigerian player, I think there'll be less of that complaint. Now that it's not Shell, it's not the oil giant Shell, it's a local player. Another problem with local player is financing. I mean, Shell used to account for about half of Nigeria's oil output. Now I think it's down to one third of Nigeria's 2.2 million barrels of oil and condensate. So will the local players be able to, the funding for the JVs, will they be able to meet up to that funding? Those are questions that remain to be said. And Shell's divestment is not just in Nigeria. It's not just Shell. It's not just Shell. Other global oil companies are slowly divesting away from Africa. Yeah. So when you sell off the local players, it might be a chance for Nigerian players to even grow around the continent. Yeah. Maybe an opportunity for growth, and you acquire other Shell assets across the continent.
With this announcement from Shell now, how do you see the federal government actually responding to this?
Well, I think, they'll take a long, hard look at themselves. I mean, the PIB, who knows, if we had passed the PIB, maybe they would have had incentives to stay, but you didn't pass it. Decisions have been made, not here, but obviously at the Hague, the head office in The Hague. And Shell would pull out. Other oil companies have indicated that, or not just indicated, have been actively selling off some assets. So the federal government would need to take a long, hard look at itself. Okay, where do we go from here? Do we actively start participating, not just as a joint venture player, but there's the MPDC. Do we go full on as an oil company and go it alone? Do we partner with Nigerian players? What do we do? They need to sit down and strategize.
And this sounds like a very long process now. If the world is talking about going green now and less demand for oil, and we are still waiting for FAC allocation, which majorly comes from oil, then when are we going to start our process?
It comes down to the subsidy removal. It will be hard. It will be tough. The impact would be might be dire in some situations and circumstances, but it has to be done. You need to deregulate that aspect of the oil industry so that the governors can have more funds, and channel those funds to infrastructure, to things aimed at lowering the cost of doing business or improving the ease of doing business and making lives easier for Nigerians, having cheap mass transit systems, because obviously the increase in the price of fuel would affect transportation, which would, the price of everything depends on transportation. Moving food from the farms to the markets, that cost goes up. Moving people from point A to point B, that cost goes up. And the inflation right now, talking about inflation at 18, it dropped. I don't see it dropping anytime soon if fuel goes up to 3.
All right, let's look at the market now, the forex market. How's the Naira looking?
It's stable. It's stable on the parallel market. It's been stable since the CBN took away the official 379 value from its CBN website. Everybody is waiting patiently for
no response from CBN yet
for some sort of follow-up announcement, but it's been mute. So you're trading cautiously. If you say nothing, we'll assume that every transaction, or most transactions, are done at the NAFEX rate, which is about 410, 411, and which means that obviously some increased to have the impact on FAC. But then again, the government has come out to say that since sometime in March, that has already been reflecting in your FAC allocation, but there's been no increase in the amount that the FAC have been sharing. So it's something that we just have to wait and see. There has to be some sort of communication. The market's right now on the edge because it happened in the past where there was a shift, the IFX rate shifted. We thought they had deregulated the market, and the next day, about 2 days later, it went back, or happened on a public holiday, and the next day it went back. So we'll have to just wait and see it for the government to come out.
A lot of uncertainty, policy, somersaults, and all that.
So much to wait and see.
Yes. Yeah. Well, just before we let you go, take us through the prices in the agriculture commodities market.
Oh, right now they're all in the red. All the prices are going up. The major driver
still in the red.
Still in the red. The major driver is obviously seasonality. This is the planting season. Well, the harvest season was sometime in July, August. There's the supply chain issues, logistics, insecurity in parts of the country where we grow food. These would affect obviously the prices or the amount the amount that you can actually plant or harvest, which would make some commodities scarce and push up prices even further. So at the moment, it's seasonality and the exchange rates. A lot of food items have been placed on the CBN restriction, FX restriction list. So you have to go to the parallel market to source your forex to bring in these food items, obviously at a higher price. So all
right, thank you so much, Nosike Wanjide, for sharing your thoughts with us this morning and for clearing the air on some of those issues. Well, we'll take a moment. When we come back, we'll go to the markets.